Singapore savings bonds and T-bills are giving higher and higher interest nowadays, there's one strategy that you should be aware of, and that is the bond ladder. Basically, a bond ladder is a portfolio of bonds that have different maturities. And when you build it up, you will get this super nice passive income stream that pays you money every single month, like magic. Personally, I'm also in the process of building up a bond ladder. So, in this video, I'll be talking about how you can build a bond ladder using SSB and T-bills. What are the benefits and downsides of it? And finally, I will share some tips and tricks when building a bond ladder. Alright, let's jump right in. Okay, before I talk about how to build a bond ladder using SSB, let me quickly do a quick refresher of how SSB works. SSB is a 10-year government bond that pays interest every 6 months. Throughout the 10 years, the interest doesn't stay the same. Instead, it slowly goes up every year. So, for example, for this SSB, the interest starts at 2.95%, and at the 4th year, it goes up to 3.25%. Then slowly increases all the way to 3.63% in the final year. For most bonds out there, if you want to get back your money early, you have to sell the bond at whatever is the current market price and risk losing money. But for SSB, they'd be like, we don't do that here. SSB lets you redeem it anytime and get back your money within 1 month, or without losing any capital. Though the bank will still charge you a $2 chicken rice money to redeem the bond. So that's how SSB works. Now let's talk about how to build a SSB bond ladder. This is the July 2022 SSB. It starts with an interest rate of 1.69% and keeps increasing all the way to 3% in the 10th year. So if we hold it till maturity, the average interest that you will get is 2.71% or 1.36% average yield every January and July for 10 years. Then all I need to do is keep applying for SSBs every single month. After 6 months, the bond ladder is complete, and I will end up with this super colorful chart where I'll be receiving a passive income every single month. Oh, and it doesn't just end there. You can continue on and keep investing in more SSBs. The more SSB you stack, the higher interest that you will get every month. After 10 years, the SSB will mature and you will get back your money, which you can then put into another new SSB and repeat the whole cycle all over again. So that's how you build a SSB bond ladder. But what about T-bills? Can you build a bond ladder with T-bills? Sure you can. 6 months T-bills come out every 2 weeks, while 1 year T-bills come out every quarter. So if you want a bond ladder that pays out interest every month, you will need to use the 6 months T-bill. The T-bills bond ladder chart will look something like this. You get a 6 months T-bill for July, August, all the way to December. Then by January, the July T-bill matures, and you reinvest the money into another new T-bill for another 6 months, and so on. As you might imagine, this is actually super mafan, as you need to lock in every single month to invest into a new bond. You go holiday, also need to lock in. You fall sick, also need to lock in. Otherwise, your bond ladder will not be complete. But with that being said, there are actually 2 benefits to creating a bond ladder using T-bills. First, T-bill yields are actually higher than SSB yields. For example, December T-bill was giving 4.3% interest, while SSB is just giving 3.3% average interest. So if you don't mind the hassle of creating a T-bill bond ladder, you get to earn a slightly higher interest rate. Second, unlike SSB, which has a 200k limit, there's no limit to how much T-bills you can apply for. So if you are a rich boy, you can technically apply for $10 million worth of T-bills and still get it, subjected to auction results of course. Personally, I prefer the SSB bond ladder as it requires a lot less work to maintain. Also, here's a tip. Besides using cash to invest into T-bills, you can also consider investing your CPF OA money into T-bills. By doing so, your CPF OA money will now earn a good 4% yield per annum up to 6 months, which I think is pretty good. But the downside is, in order to apply, you will need to physically head down to the bank branch to submit your application. Quick pause. Right now, there's an ongoing fishing event in the Moomoo Singapore app. To find it, just go to Me, Promotions, and you will find the Fishing Joy game, where the more fish you catch, the more rewards you will earn. This event ends on 31st January. Besides that, Moomoo Cash Plus is giving a guaranteed 5% yield. So if you put in $10,000, you will earn $123 over 5 months. And the more friends you invite, the more rewards that you will earn. Best of all, there's no lock-in period and you are free to redeem anytime you want. So if you are interested, you can sign up to Moomoo and enjoy all their features along with all their free sign-up rewards. And with that being said, let's get back to the video. Okay, let's talk about the benefits of a SSB bond ladder. First, you will get a monthly payout. So assuming if you have built up the bond ladder and have applied for $10,000 per SSB, you'll be getting a nice $100+ every month to buy your Chai fund. This could be useful for people who want some passive income, like retirees, to pay for their monthly expenses. Though, two things to take note here. One, with SSBs getting super popular nowadays, since the middle of last year, the amount of SSB that each person can get is limited to around $10,000. Second, everyone can only get up to 200k worth of SSBs. So you can't just stack the bond ladder forever and get infinite money, yeah. Second, you can recycle the capital. Here's what I mean. So let's say later down the road, you see another bond that's giving a higher yield. What you can do is go through your bonds and see which has the lowest yield, redeem it, put the money into a new bond to earn even higher interest. That way, you'll be able to keep earning the highest possible interest on your capital. This also applies for stuff like when you need the money one day, like maybe you need it for your wedding, your house, or you need it to buy the dip on the stock that's falling 10% every other day. Then you can redeem the bond that's giving the lowest yield while letting the rest of the bonds continue earning a higher interest. Okay, enough of angkat bolas. Let's talk about the downside of a bond ladder. Actually, there's only one downside, and that is the yield is actually quite low. If you look at every other stuff that pays an interest, you'll find that most of them are easily giving a much higher yield. Fullerton SGD Cash Fund, 3.9% yield. Savings Account, 3.85% yield. Fixed Deposit, 4.2% yield. T-Bills, 4.3% yield. Meanwhile, SSB is still giving a set 3.3% yield. And that is if you hold it for 10 years. The first few years are just giving even lower yields. Then how? Okay, here's where SSB strength comes into play. Prior to 2022, everything was giving a super low yield. Like UOB One account was giving less than 1% interest. SGS yields didn't even touch 2%. And ROBOADVISORS cash management accounts were happily giving a 1.6% yield. But now, because the Fed has been raising rates fast and furious over the past 1 year, all those interest rates have been going to the moon. But this won't last forever. Right now, the federal funds rate is already at 4.25%, and the Fed is expecting that the rate will only go up by another 1% before they achieve the peak rate. And the market is already expecting that the rates to start coming down by the end of next year. If that happens, we can all say bye-bye to 3 to 4% kind of rates. But because SSB has a 10-year maturity period, by investing in SSB now, you get to lock in a high yield for 10 years, which is actually super good. As the saying goes, human life got how many 10 years lah? Finally, let's talk about some tips and tricks of creating a SSB bond ladder. 1. Predict bond yields. So, as mentioned earlier, the one benefit of the SSB bond ladder is that you are able to redeem the bond that has the lowest yield, then put it into the next bond that has a higher yield. And to do that, it would be good if you are able to predict the next bond yield, so that you are able to redeem before the redemption deadline, which closes at 9 PM on the 4th last business day of the month. Luckily, there's a website that lets you easily predict bond yields called ilovessb.com. Here, you can see what's the projected SSB yield for the following month. If the yield is higher, then it will be worth it to redeem early. Or if you are too lazy to compare, the website also has a tool that helps you determine whether it's worth it to swap over or not. So do check out ilovessb.com because this is a really useful tool. Second, dollar cost average. Now, even though I mentioned that in order to build the SSB bond ladder, you need to invest in every single SSB for 6 months. But in reality, you don't have to do that. You can just as easily build a bond ladder by just all in your money into one single bond and hold it for 10 years. And looking at how SSB yields have been dropping these past few months, maybe it's a good idea to do so. But of course, instead of getting paid every single month, you are now only getting paid every 6 months. Though I don't think that is actually a big deal. Without those SSB payouts, you can still easily survive on rainwater and air for 5 months, right? Anyway, the reason I prefer spreading my money over multiple bonds instead of just all in into one bond is because by doing so, I get to dollar cost average my money. So remember, back in September, all the aunties and uncles were queuing up for hours to invest in a super high 2.7% fixed deposit. Well, as most of you already know, it turns out that 2.7% is not high at all, as now the rates have already gone up to 4.2%. Hosebo. This is the same for SSB. Rather than all in your money into just 1 month SSB, by spreading your money across multiple months, you get to average out your yield. That way, you don't have to guess how the yield is going to go next. The yield goes up, you buy. The yield goes down, you cry a bit, then you buy more. Anyway, that's all for this video. Hopefully, you find it useful. If you want a tutorial on how to apply for SSB, you can check out my video up here. But do comment down below and let me know. Are you personally building a SSB bond ladder? Or is it actually a bad idea? Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.